So freight brokers should be considering single trip cargo insurance for two scenarios. One is for FTL loads that have values where the cargo values are over 100,000, or for any LTL load. So let's start with FTL. 95 to 99% of all motor carriers have $100,000 in primary cargo coverage. That means that they don't have coverage for loads that are excess of that $100,000. And because the motor carrier pool has so many, since that is what most carriers have, there isn't really a viable, scalable option if you're moving values consistently that are above that, because your motor carrier pool shrinks dramatically if you need to find motor carriers that have coverage limits above the 100,000. So you need a quick solution that allows you to instantly boost coverage when you need to move a load that has that higher value. We've also been finding that many shippers are requiring the freight broker to have higher coverages than even the values of the load being moved. And they're doing that via shipper broker contracts. So oftentimes, and it's happening with a lot of the larger shippers out there, they say, regardless of how much the value of the load is, I need you to carry $250,000 of cargo coverage. A lot of times the value of the load isn't even $250,000. A lot of times the freight broker doesn't even know the specifics of the value of the load, but they know that the contract requires them to have it. So they either have to find carriers that can move those loads that have $250,000 in their primary cargo. Well, that's expensive. And as we just mentioned, there's not a lot of them. Or they have to have another solution in place, like an excess cargo insurance option. Shipper's interest, spike insurance, excess cargo insurance, these are all different ways of calling it. But essentially it is a per trip coverage that covers the load from when it's picked up to when it's delivered. So in the FTL situation, if the load is worth $250,000 and the motor carrier has 100,000, you would need 150,000 of excess on top of that. So that's where it's a solution for a freight broker who wants to move the load and wants to use one of their preferred carriers or wants to have access to their full fleet of carriers. For LTL loads, insurance coverage is a lot different. LTL loads are covered by tariffs, which is generally a dollar amount per pound. LTL coverage is almost never adequate for the value of the load being moved. And that's because there's multiple shippers in a truck at once. So the insurance gets divvied out by all of them. Well, if you have a pallet of potatoes and a pallet of computers, well, whatever weighs more is going to get more insurance in those scenarios. So if the freight broker wants to offer a primary cargo insurance option for their shippers, saying if something happens to the cargo, and this is an LTL load, then we want to be able to have control. We want to be able to insure the value of the load, file the claims ourselves, and get it paid. So, the job of the freight broker is to make their shippers' lives easier and to make sure that the load is covered, protected, and safe. That's why you would want that per trip cargo insurance for an LTL load. Both are valuable. Every LTL load should be insured, and any FTL load above 100,000 or really above the carrier's primary cargo limit is applicable. If you guys have any questions, then we'd love to hear from you. Leave a comment and somebody will get back to you right away.